Good evening, Wealth Our Way Nation. What is going on? It is your main man, Charles Tank Harris, the founder and chief visionary officer of the financial literacy platform Wealth Our Way, where our motto is wealth is not only for the wealthy. We are having our first of the year, 52 weeks. We're going to have a special segment once a week. I actually spoke to a Wealth Our Way client today, and we're going to probably move it from Wednesday to Tuesday. So be blessed that you're getting the first Wednesday edition of 15 Minutes of Finance Extended, where we will be discussing all things taxes, getting ready for your tax filing this year. I will have 3 amazing tax professionals joining me tonight. And the first one is already with us, the lovely Alexis Sydney. Please just introduce yourself to the people, Alexis. We'll do it again as things populate, but I don't want to miss not 1 second of you being able to share yourself with the audience.
Thank you. It's a pleasure being here. I love this tax stuff. It's tax time, and hey, we had somebody else join. Hey,
yeah, I have Kamari's an old pro and an old friend of mine. We'll have him jump in and introduce himself after you go, and Pete will be here any second too. But you just go ahead and run the show. I told everybody it's going to be Beauty and the Beasts.
Oh,
so the brothers will be populated.
I'll take that. Beauty. Thank you. So yeah, I'm Alexis Sydney. I am founder and CEO of the 12 firm. We are an accounting and tax firm, and we specialize in working with small businesses, entrepreneurs, those who actually have 9-to-5 jobs, who also run a business on the side. That is our specialty. We love working with those types of individuals and helping them with their taxes and focusing on their businesses and growing them and making sure they have the correct systems in place as it relates to managing their business finances, taxes, and just taking their business to the next level. So eventually they can leave the 9-to-5 jobs and pursue their business full time. So I've been in the tax industry for 17 years now. I know I look young, but I've been around. I love working in taxes. I love educating people and just making sure they're up to date on the latest tax laws and just having the proper things in place as it relates to taxes and tax planning, so that you don't have any surprises with the IRS. You know where you stand. And then if you do get in trouble, we are here to represent you. So we can do that. I see Kamari is also an enrolled agent. So that gives us that special credential to work with the IRS and represent people if they ever face any trouble. So that's enough about me. I'll go ahead and turn the mic back over to the beast.
There it is. I want that. I'm gonna get that tattooed, the financial beast. This brother, me and him go way back. Not only are we both Philly natives, not only are we both TU brothers, you know, I've been connected with him. Every so often, somebody will say, knowing that I'm in the financial field, oh, yo, I got this brother you need to talk to. He's the man, da-da-da-da. And it's always Kamari. Like, literally, it's always Kamari. So the reality is that we've been connected through so many different people. Our energy, you know, always, it's funny. We like have that opposites attract type of energy where, you know, I'm a wild boy. I'll say anything. And then Kamari gets me out of trouble. So with that being said, I'm going to introduce to the microphone and let him tell you about himself, Mr. Kamari Ellis.
Well, thank you for having me, Tank, Charles. I always get confused on these public platforms, how I'm supposed to talk to you. But thank you for having me either way. And yes, Alexis, we are gang. We are both EA, so I appreciate you as well. I'm Kamari Ellis. I'm the founder of the Philly Tax Team. I'm a tax accountant, former portfolio manager, reformed financial advisor. So I kind of been all around the personal finance and small business space, done a little bit of everything. I've been in tax though because my dad was an accountant and kind of made me do it because I had to go there every day after school. And so it's kind of full circle. So I've been doing this for quite some time, and I can echo everything Alexis says. I love to educate. A lot of people, there's a lot of bad information floating around out there. They're getting in trouble with the IRS because some folks are following this information. So it's sad. But yeah, I help people with taxes. I work with a lot of small business owners, a lot of real estate investors, a lot of e-commerce entrepreneurs. And that's just about it for me.
I appreciate that, brother Kamari. And then, you know, last but not least, we used to call this boy Pretty Pete back in the day at school. You know, I used to walk down the street and people used to think I was bodyguarding Morris Chestnut whenever I was walking down the street with Pete Baycoat. So I'm going to let the brother Pete Baycoat introduce himself before we get started.
Yeah, thank you for having me, Mr. Exaggerator over here. I appreciate you, and echo some of the sentiments that my colleagues have said. In the business of helping businesses, helping people understand the tax code.
Pete, we need a little more volume out of you, bro.
Not a problem. How about, let me just turn my mic a little bit. One sec. I apologize. How about now? Is that better?
Much better, yep.
All right, awesome. So again, I want to echo the sentiments of my colleagues here. The whole goal is to help people understand what the tax codes are, tax planning, making good decisions as business people. Oftentimes, we don't have the resources, don't know where to get the resources to make good business decisions. So it's good to have people on your team you can call or talk to make the next step. The problem is half the people, like I think Kamari said, get a lot of bad information and run with it. I tell people all the time, if you want me to do it, it's one price. If you do it first and I got to fix it, it's a different price.
I like that. I like that.
And that's the reason is because at the end of the day, if you do what you're good at, and let somebody else do what you're not good at, so you can become a better business overall. So my organization has been around for about 12 years now, and we do exactly that. We try to help small businesses and individuals take advantage of the tax codes and making sure that their strategy is properly aligned, as opposed to, hey, here's what I did, what do you think? I can't do anything with a cut off arm with a Band-Aid. It's not gonna do anything. I'm just gonna tell you how that's gonna work out. You're gonna bleed out and I'm not gonna be able to help you, but pay this much and we'll get past it for the next time. So I appreciate you having me on this forum, Mr. Charles Tank Harris, Mr. Wealth Our Way, making everybody happy, keeping them all informed. So thank you for having me as part of this forum.
Well, I thank each and every one of you for being here. One of the things that I've promised the audience this year, we have over 200 shows, 15-minute shows under our belt at Wealth Our Way. Even though it says episode 118, I started numbering the episodes last year when one of my clients, Brandon Copeland, who plays for the Atlanta Falcons, he has a financial platform called Life 101. And he asked me to start putting my 15 minutes of finance on his platform. And he said, hey, man, we can't tell them apart if you don't number them. So I started numbering them on his platform, I think in March, but I had been doing it for a year before that. So I have over 220 episodes of bringing people financial information. And very similar to what Kamari said and Pete echoed, it's crazy out here in the streets. Like, people will say anything, and unfortunately, other people will believe it. So I love the fact that I have no problem burning the information that I say, as I like to tell people. It's burnt onto the internet. You can go back and check episode 9. You can go back and check episode 102. And I'm hard pressed to believe someone's going to challenge anything that I said as being incorrect, inaccurate, and just off the reservation. Because first and foremost, as my audience knows, I'm the first person to tell you, if I say a number to you, please go Google check that, because numbers change every 13 seconds. So I can tell you what the contribution limit was, or what the return of something historically was, and be off. And I tell people that the heart of the information, though, the 24 years of investment experience, financial services experience, has led to a wealth of just knowledge in so many areas. But this is why the 3 people who are on here tonight are on here tonight. I always tell my audience, I know what I know, and when I don't know, I go get someone who knows. So if I had to critique Wealth Our Way's 15 minutes of finance last year, if I had to hear one thing over and over again from our audience, it was, man, you give us so much information, I don't even know where to begin. And it's hard to take action on what it is that you're telling us to do. Because, no matter how you break it down for us, Tank, we still got to go out and do it. And I always compare the financial journey with my weight loss journey. I've lost 150 pounds 3 different times. So you can either congratulate me or say, damn, you keep gaining it back. Like, either way, the reality is that I know how to do something, but then I get to a point and it reverses back. Finances are no different. People can think about what they need to do. People can even take action on what they need to do, but sustaining that action is what causes a lot of challenges. So I said, going into this year, we're going to have a weekly theme. And this week's theme is, hey, I just got finished writing a check for $49,000 on Monday for taxes, because I don't like to pay my estimates on time. And you guys will get on my back about that as we go through the show. But I think the money's better in my hands than the IRS's hands until I have to give it to them. And the reality is people are preparing now to wrap up tax year 2021. And what can they do between now and April 15th to put themselves in the best position? People will learn tonight from you good people that there are things that they can still do. Yes, the tax year is wrapped, but there are things they can do, ways they can prepare. And I want you guys to spit that knowledge to the audience. We'll field questions. I'll throw some questions at you, but I'm going to start with this first question. And I'm going to, of course, show gender bias and go to Alexis first. And I can get away with the gender bias because her name does also start with A. So I'm going to go with Alexis first and ask, what is the number one thing that comes into you, that people come into your office, on your phone, in your inbox, asking you about what they should have done as far as being prepared for tax time?
Funny. Yes. So a lot of times I get clients, they'll come to me, or a lot of new clients will come to me, and their biggest thing is like, oh my gosh, how much is it going to be bad? Am I going to owe? And it's like this frantic and this panic. And it drives me crazy sometimes, especially for business owners, because they can control that. You can control what your tax picture looks like if you do what is necessary and tax plan at the beginning of the year or before the year starts, year end, so that you'll know what your situation looks like. And then you can revisit it quarterly throughout the year, so that you have that touch point. So if something shifts, I always claim, like, if you get that extra $100,000 or that $1 million deal, that changes your tax plan and that changes your picture. So you looking at your situation quarterly, it allows you to pivot and shift and make changes and adjustments so that there should not be a surprise when it comes tax time and you're frantic and you're like, oh my God, what is this bill going to look like? So I get that a lot with people. And even some of my clients, they just choose to be hard-headed. They don't want to do it, although we offer the services. Oh, it costs too much, or oh, I'll get around to you. You never hear back from them, and it's like that repetitious cycle of this tax bill. So I get a lot of that.
Same question to you, Kamari. And then after Kamari answers it, Pete, same thing to you. Somebody comes in your office the first time, they got their shoebox with their stuff hanging out of it, or they don't even have that. How do you get at them?
Well, oh man. I mean, listen, I see Alexis has the same mic as me, same credentials as me. I'm about to spit the same thing as her. But it's always reactive, right? The beautiful thing I tell folks about the tax code, or taxes in general, is that the tax code is a cheat code. It's also the wealth code. And so if you use it accordingly, you wouldn't come here and say, I think they're about to garnish my check. Or am I going to go to jail because I haven't filed taxes in the last 10 years? So I get a full range of all of that, plus questions about all the social media shenanigans. I can't tell you how many times people said, I think I want to buy a 6,000-pound vehicle. And I always say, is it ordinary and necessary to your business? What do? I'm a home-based business, and I really don't go out that much. So you probably won't have the basis to write that off, but that's something that's popular on social media amongst quote-unquote laymen and credential folks who like to talk about it. So I get the full gambit of things that are coming our way.
And if you're going to ask me, Tank, I think, not to echo what they're saying, because I think they're saying exactly the right things. However, I think what causes what Alexis was saying is fear. Right? I think what stops people from actually getting the service is because they don't want to have to deal with the tax liability. When you're working for somebody's taking that tax out of your check and they're giving you the leftover, you're good with that. I don't have no worries. I know I paid the feds, I paid the state, I paid everybody I had to pay. I'm good. And as a business owner, it's just the opposite. You're not sure if you're paying enough or whatever the case may be. So they hide. Right? And when they come to me with that shoebox, first of all, you come to the shoebox, I tell them, this will cost you a lot. If you want to go back and organize that or come back and let me do it, it's going to cost a lot for me to mess with that. But secondly, fear actually paralyzes a lot of good business owners because they don't want to deal with it. And like Kamara was saying, when they come, you haven't filed in 5 or 6 years, you cost yourself so much penalty and interest that had you handled it on time and with a professional, you could have saved yourself a ton of money above and beyond what it would have cost you for one of us to prepare your taxes. But as far as what you can do right now, there's still an IRA benefit if you make under a certain amount of money that you can put money into through April 15th to still get a tax benefit from. There's different funds. I believe there's a solar benefit fund that you can put money into and still get the full benefit of that, the solar credit, if you started at a certain point. But more so, I think the sentiment that I hear in the room is be organized, all right? Don't be ahead of the game and not behind the game, because again, I can only tell you what's going to happen after the game, whereas I can kind of steer the ship a little more beforehand, and we can come up with a plan together. Tank, you and I work together all the time. Like, hey, here's my client situation. What do you think? And then we'll go, oh yeah, let's try this. And at the end of the day, the clients are like, well, that's not bad. I thought I was going to pay a lot more. Yeah, you did, because you were just going dollar for dollar, no strategy involved. Therefore, you're going to get what you get. You're treating yourself like an individual. You're going to get treated like an individual and pay a lot of taxes.
I want to touch on something you just said, Pete, and I want everybody to get into it because I learned this on Monday, and I'm always happy to learn new things regardless of how much I know. Taxes aren't my strong suit, so I got a breakdown on the penalty for late filing versus the penalty for late payment versus the interest carry for any of those amounts, and I want to get into that with you guys. But before I do, we do have a good question from Rebel Hill Productions, and I want you guys to all have a chance to answer that. So the question is, when's the best time to switch accountants? I'm not a fan of my current accountant, but it seems like they always have something in the works for me. Not sure when to cut them cats loose.
That's a rough one. I tell folks all the time, the relationship you have with your accountant is a very personal, intimate relationship. Mm-hmm. So it sounds like y'all aren't communicating really good. What I would say is you probably need to go back and tell them the communication you need and would desire. But to answer your question, I would say any time is a good time to switch because there's no time like the present, right? And so if you and that professional are not vibing or not getting along or not maximizing your tax savings, then you probably aren't the best fit for one another. And listen, everybody can't be my client. I'm pretty sure Alexis and Pete will say the same thing. Again, it's a very personal, it's a very intimate thing. Some people vibe better with others. I'm going to tell you right now, I usually don't get along well with hairstylists and barbers. I love them to death, but a lot of times, a lot of the education I have to do with them, they're very resistant to me. And so I haven't figured out a way to better communicate that information to them to really get them to understand that y'all really got the keys to the kingdom. Y'all in the cash business. People, it's recession proof for the most part. And a lot of times y'all miss out because y'all don't want to pay taxes and you don't report anything. So that's just an example of something I have to deal with.
Alexis, do you want to jump in on that?
I definitely will. I echo what Kamari stated. One thing I would say, like, it's no time like the present. But I'm a big proponent of, you don't want to be bouncing around from this person to that person to the next one. So before you really make that decision, I would definitely just sit down and maybe list some things that you're not satisfied with, and just see if you are able to work that out with your current accountant, or at least have those set expectations of the things that you're not pleased with before moving. So when you start interviewing or you get referrals from, somebody you're connected with, you'll have something to go off of. And then when you're interviewing for the next accountant, you can just have a list of, this is my expectation, this is what I like, this is what I'm needing. And you're not just like flying off of, oh, I like what they're doing, they got something in the works, but you don't know, if it's a good fit for you. So at least go into the next situation with something, or just try to work it out with your current accountant. But again, I echo what Kamari said, but I just wanted to add that into the conversation.
Rock, take us home on that topic.
I want to add on to what Alexis said. I think she mentioned something really good, expectations, right? It depends on the kind of communicator you are. We're trying to do a better job of our first meeting is a conversation of what do you expect from me, right? Because if you expect to call me 20 times a day and talk about everything, I'm going to break your heart. I'm not going to be available. It just doesn't work. It doesn't work that way. But if you need to understand that you set an appointment with my assistant and you can have 25, 30 minutes, whatever you need, then it works better. And I think most of the disappointment comes when expectations aren't met, right? I thought I was going to get a guy who's going to meet with me once a week and tell me what to do, and I talk to you every 3 or 4 weeks. So that is a big issue. And for us, we try to set the expectation bar so that our clients understand how to get information without hitting me up every 5 minutes. We have a portal system. You can get it from there. It'll be there sitting there waiting for you, right? Go get it. But also, I think if you're going to switch accountants, if you're in a specific field, make sure that their accountant is versed in your field. Make sure they understand that what you're bringing to the table, because we all have experience across the board. Business is business at the end of the day. But there are certain things that are more intimate to that line of business and how that works that can help you out. If you're a trucker, as opposed, like you said, barbers, man, them barbers kill themselves. They don't want to. Yeah, listen, I made 20,000. Hey, but I want to get a house.
You know that you raised a good question, Pete. And before we go into the whole penalties and the costs that I was going to talk about, I think in our community, let's just keep it funky. You know, going back to the 5 heartbeats in Big Red with 2 sets of books.
Sure.
You know, we saw this firsthand with the pandemic money. You had everybody wanting to get they COVID dough, and nobody had any books to justify the money they said that they made, because everybody wanted to pay -3 cents in taxes and wanted to say they was poor every 5 seconds. And now when the government wanted you to show you made some money, or if you're going to go get a house or you're going to go get some business credit, now you don't have the books that say you do that because you've been trying to minimize taxes. Please speak to how people in our community and beyond can do themselves a great disservice by trying to, you know, front that they're broke on one end instead of showing that they're a viable business like they should.
Well, let me jump in real quick because I want to go back to the previous point just real quick. Give me 30 seconds.
Yes, sir.
For Rebel Hill also, I want you to also realize that these last 2 years have been phenomenally excruciating for your tax professional. They've had to deal with COVID themselves. They've had to deal with the PPP loans. I can't tell you how many people I had to get their books in order so they can get PPP and EIDL. And all of that is a strain on all of us. I've seen accountants say they are shutting down. They're turning away clients because they can't deal with it anymore. So I would also say, like everybody else said, make sure you have that rapport and give them a little grace, just a little grace, because they're going through the same things you're going through. Now, to come back to your question, Tank, that's a rough one. I deal with it a lot. I think about it a lot. We definitely do ourselves a disservice because sadly, Black folks have been oppressed for a long time. And every chance that we get to get some comeuppance or make a way, we want to try to exploit that as much as possible. And I get that. But in the same time, we want to take shortcuts, and there really are no shortcuts, especially for us, because when we take shortcuts, the penalty is exponentially different or greater than anybody else on the spectrum. So it actually behooves us to ride it straight and narrow, do our books properly, have one set of books, pay our taxes on time. Because when you look at the Fat Joes, when you look at the Wesley Snipes, when you look at the Lauryn Hills, they all got advice from somebody else that doesn't look like us that wound up getting them in trouble. And there are plenty of other people that do the same thing, but we can't do what everybody else does. So we need to stop even worrying about what everybody else does. We just need to do what's the right thing, because in the end, it's usually the best thing for us.
Well, Tank, real quick, I'm going to say on 2 sets of books, my office hours are from 9. You know, again, it's the hustle mentality, right? We've always had to grind hard to get a little bit of something that we have. So in hindsight, we keep that mentality in business, and instead of becoming business people, we become hustlers. So we hustle hard. Now that we work from nothing, we didn't have parents leaving us money so we could start a business. A great example is that I have a client that wants to do real estate, and I told him I helped the client go from 4 properties to 28 properties. He said, "Man, that's awesome. Can you help me?" I said, "Yeah." So where do you get the money? I said, his dad gave him $100,000 to start off with. We don't normally get that. We don't normally get that leg up. And so what happens is, so we work so hard that now we've made a little bit of something. We're trying to hold it to the chest and don't want to give any of it to our uncle that we don't like. So therefore it becomes that I don't make any money. I ain't got nothing, because I think I'm losing out instead of understanding the whole concept of this game is to show and grow, right? So at the end of the day, I think that's where a lot of it comes from, is that we haven't had any leadership guidance. Like the fact that you're having this program, Tank, is huge, because it's going to open up a couple people's lives. Like, you know what, I got to stop keeping that cash in my shoebox in my baby mama house. I I got to put that money in the bank and show it and show that I make this money. So the fact that you're bringing that up is an awesome thing.
Yeah, this whole PPP EIDL, I just want to say, first of all, I thank God that they recalculate how they was giving people the money, because initially most people who had a loss would not qualify. But then when they recalculated it and changed it and they based it off of your gross, I'm glad that that happened, so that people was able to take advantage of the funding. I hope that by now you all have done your forgiveness applications. But this process, this opportunity for, I guess, free money, if you want to call it that, it was a wake-up call. I encountered so many individuals and businesses who did not have their stuff in order. And it was really a wake-up call for me as a professional to be able to get into the streets, into the world, and be able to just be a resource or provide the services that these businesses are needed. It's definitely a mindset. We as people, we don't have the best opportunities or have not. So there's a poor man mindset that's going on where people just feel like you all just shared, that they don't want to report it because somebody's taking it away, or they hear people talking who have advantages and they have money and they have wealth, and they feel like they're on the same level with them in a financial sense, and then their attitude is, oh, we don't pay taxes. But your way of not paying taxes is not the right way. And their way of not paying taxes is strategic and it's planned and it's proper.
Legal.
So I see so much of that, and it kills me. But that's my mission. And it was definitely, like I said, a wake up call for PPP, for me to be able to offer the services that people need. Whether you want to do it yourself or whether you want our firm to assist you and kind of guide you. But it's needed in our community. And yeah, I'm glad PPP was over. And I hope you all take the money that you got and really use it to grow and advance in your business.
Let me jump in here. We're going to answer a question from Tashawana in regards to the relationship between credit scores and owning your own business. We do a lot of talk on alternative and additional streams of income on 15 Minutes of Finance. And we always want to make sure people have a firm understanding as to what it means to have a business. I touch on that all the time with letting people know there is a difference between being self-employed and owning your own business. And the way I always describe it to people is, if you can't go into a coma or go on vacation or disappear with your fiance and discover love for 3 months without your entire business falling apart, you are self-employed. If you run a business that can miss you for a year and basically operate the way it was operating when you were at the helm, you run a business. And there's nothing wrong with being self-employed. And this isn't limited to our community. This is just in general. People hold out this. I just worked with a client earlier today to start working on their pension. And the reason they're getting a pension is because they're employed and they have a job. Now, they think their life is not as good as my life because I own my own business. But guess what? Big Tank don't have no pension. I have to make my own pension. I'm self-employed business owner. So everything has its pros and its cons. But to directly talk about what Tashawana is asking, could you guys touch on the clients that you see come across your desk? Do they have good credit scores? How it helps their business? How it hurts their business if they don't? Pete, we'll start with you.
All right. So it's interesting because we've done a lot of research lately on the credit phenomenon. Right?
Pete, I think I'm getting an echo from you.
Is it me?
Because the other two guests are on mute. So it might be you. Let's leave you on mute for a minute and have Alexis answer the question and see how that sounds.
Okay, great. Yeah. So I do work with business owners and helping them establish business credit. That's a service that we do provide. And I definitely see a lot of times where people are looking for funding opportunities, and it definitely increased, like I said, as a result of the PPP funding and the EIDL. Now everybody's like, well, what's next? What's next? I need some funding. And you definitely, credit score does play a role in being able to receive those funds for different products and things that are available. So I work with clients to ensure that their credit scores are in order. I don't deal with personal credit, but more so business. And a lot of times you'll often hear people say like, oh, well, your personal credit doesn't matter with business. And that can be the case with certain things, but you do need your personal credit to be in line so that you can have more of an advantage to be able to take advantage of business things that are out there, business resources that may rely on just viewing what your personal situation looks like.
Pete?
Let's see if is it now? Am I echoing now?
Now you sound better now, brother.
Oh, wonderful, wonderful. So it's a gift and a curse. If you're starting a business, you have to have good credit when you start your business, because right now you don't have enough business background in order to get loans and things in your name. If those who did the EIDL understood that you had to have a certain credit score to even get that EIDL loan, if you didn't have that, you wouldn't get it. But I do think that as businesses, we don't understand how business credit really works. Your business was set up to be separate. It wasn't set up for you to kind of intermingle the two. We don't know how to set up our business credit, get a paydex score, get a Dun & Bradstreet information, and have trade lines reporting to those things so that we can buy cars, houses, equipment using just our business credit, no PG, which is a personal guarantee, right? It should be to the point that you should be able to get there. Now, I will tell you, a lot of large lending institutions want you to be in business for 2 years. The reason being because they want to see that you can establish and maintain a viable business for at least 2 years. But in order to start off, it would help if you had at least a 680 credit score, bare minimum, bare minimum. Not saying that it's a game changer that would end the game. However, I firmly believe that every business, and we are working with our clients now, work on building your business credit now. Work on building that, because you can't take your business to the next level without capital. You have to have some kind of outside capital, unless you want to use your own cash flow, which I tell my clients, keep your cash flow, use somebody else's, and you actually get the write off of the interest that you have to pay on that money, so it works in your favor as well. So if it's for me, yeah, of course, working your credit. I'm never going to tell you don't have good credit. However, build your business credit just as much as you build your personal credit, so that you can separate the two entirely. And that's what I would say.
Brother Kamari?
Tank, can you repeat the question for me?
So basically, Tashawana is asking, what is the connection and correlation between having good credit and starting a business?
There is no correlation. Now, my colleagues might disagree with me, right? But you can sell a bottle of water on the corner and start a business, and you don't need credit at all. And what they said was absolutely correct, right? Credit is important, but I tell everybody, I'm a finance major, first and foremost. Cash is king, always will be king, right? And so when we start talking about credit, one of the things you really got to think about when it comes to business is, do you have a good business? Does your business have good cash flow, right? That is the premise of all business and all credit when you really get down to brass tacks. And so I see people say all the time, or again on the social media, get credit, get business credit. And again, it works wonders when you have it. However, we aren't even talking about the basics. Can we get to the basics? Do you understand what sales are? Do you understand what revenue is? And a lot of times folks don't know it. I had a client, and I'm actually ashamed to say this, but I had a client who's an e-commerce client. He does multiple six figures. And I started talking to him about his business, the cost of goods, his inventory, how long his inventory stays in the books. He had absolutely no idea what I was talking about. But guess what? He got some business credit, and he ran it up and destroyed his credit. So you can get access to these tools. Again, it's a double-edged sword. You can get access to these tools, and sometimes you can get them before you're prepared. And so what I say to everybody, again, I think Pete said it, have really good business acumen. Understand what your sales are. Understand what your marketing is. Understand the cost of carry, right? We're going to talk about credit. It costs to use credit. Credit's not free. You have to be responsible with credit. You got to have a strong business to even want to get credit to sustain credit. So I always go back to the adage, cash is king, because that is the number one axiom in finance, the number one law of finance. And it's important. It's very, very important.
I agree with you. I have a couple of clients and they do really well for themselves, both of whom have hit me up lately about monies that are available. I mean, the SBA is printing money at a very low rate right now. One of my clients just told me that she was told she can get another $1 million. And I said to her, or asked her, what you going to do with $1 million? I mean, it's one thing to have access to capital, but what we doing with this capital? We have to put it to work. Even at 2.7% or whatever the SBA loans are charging back now, you're not getting 2.7% if you're leaving it in your checking account. So this money is costing you money. So now you have to deploy it. And to kind of piggyback on what Kamari said about good business fundamentals, as an investment guy, I think of risk all the time. I sleep with risk.
All the time.
It's all the risks. There's more risks than there are members of Menudo. There's, liquidity risk, there's investment risk, there's sequence risk, there's all types of risk. And we don't even know all of them. Like most people have no idea of all the risks. We're always focusing on one risk. And you get $1 million, now you have the risk of reinvestment risk. Where do I put this money? And am I putting it in such a place that's outside of my business model? So I grew up in the mergers and acquisition age where businesses would go in these cycles of trying to cut expenses and then trying to increase revenue by doing the same thing they did last year to cut revenue. So I think of Coca-Cola and Pepsi. Coca-Cola and Pepsi look at their bottom line and they say, where do we spend the most money? We spend the most money having people transport our soda to the people who are buying it and bottling it to put into the trucks. So you know what? We're not paying any more transportation. We're not paying any more bottlers. We're going to open our own bottles and we're going to open our own transportation. We all own that in-house now. They go 3 years. They look at their books and they say, you know what? We spend a lot of money on trucking and bottling. We should outsource that. And then they cut the division. And people don't understand that that's a business cycle that we should all be so blessed to go through as we grow and realize what needs to be outsourced, what needs to be in-house. But in deploying capital in areas where it doesn't serve us best does us no good. So it's a great question on credit, but I echo what all the guests have said about making sure you're using it intelligently and making sure you have the means to handle it. There are certain things we need to know about running a business before we worry about getting money from someone else to help us run our business. There were two other questions I wanted to get to. Tamiko asked, and this is something you guys shall all get a kick out of, and it's just teed up for you to hit. Why? So I tell people, and this goes right to my statement of the money I had to write my check for on Monday. I try never to get a refund. I think getting a refund is stupid. That's tank. That means I lent the government money all year long, interest free. I want to owe or be as close to zero as possible. So she said, why is it that the mindset is get a refund? Why are people hitting up H&R Block and, Liberty Tax Service trying to pay extra money to get their refunds rapidly sent to them and things of that nature? Go ahead and have some fun with that one for a minute.
It's a mindset. But again, it depends on where you are in life and your income bracket and things like that. But I do agree. For me, refunds are bad for where I'm at. That means you lent the government money and you could have kept it for yourself. So yeah, I always try to break even or just make sure that I have my estimated tax affairs in order to handle it that way. But again, you have some people who fall into the situation where they're going to get a refund. They may be in an income bracket, they get earned income credit and they get a refund and they really can't avoid that situation. So, good for them. But for others who are not in those type of situations, you definitely shouldn't be flocking for a refund or think, hey, I need a refund, because that becomes a mindset thing because you are paying more in in than what you should. So you should reverse that thinking and try to put something in place where you're holding on to your money. You can invest it and do something within the year or just put it somewhere that works better for you. And then you pay the IRS what you want them to have based off of how you set it up. So that's my 2 cents.
Well, it looks like Pete's on mute, so I guess I gotta go. This is a rough one for me because I hate all big box tax stores. Because in the past they've had a lot of predatory issues, been sued a lot. But I'm gonna say this: they run a great business. They are master marketers. They spend a lot of money on psychology, and they know the psychology of their niche client or their ideal client, and they know their client wants that refund. Sadly, because I do agree with Tank, I do agree with Alexis, right? Ideally, in theory, you don't want a refund because you're giving them you're giving the government your money all year round. But what I've also found after all these years in the business is that some people won't save. They just don't have the discipline to save. And so they use the refund time as a way to save. But sadly, a lot of them, they save and then they get the money and they go spend it again. So they're then in this cycle of debt. That's not the topic of tonight's talk, but that's part of the issue that's going on. So why do people do it? Because you see guys jumping out of planes talking about how big of a refund they can get, filing the refund with their last pay stub. By the way, the IRS frowns on filing your tax return with your last pay stub. They do not look on that well. I see a lot of people get in trouble with that, just as a sidebar. But that's why people do it. They see that fast money. Side note, a lot of things in our communities go up in price when tax time comes. Why is that? Because there's such a pattern there that people are going to get their money. They know they're going to spend it. Used cars typically go up. Furniture goes up. Travel goes up. A lot of things goes up. That tells you something.
Yeah, and I think Kamar brings up a good point. And I try to be like all encompassing as far as why refunds. It is a mindset. People don't like to deal with the IRS. So if they got to deal with them, I've got to deal with them sending me money than me sending them money. But at the end of the day, I think Kamari said it well. Everyone doesn't save, right? So some people take that money and can do something larger, whether it be reinvest in their own home or take the trip that they couldn't take before. I've seen it all different ways. But I do agree that I think that if they would take that money and invest it, they do way better. But unfortunately, we don't have the invest mindset. And then when we do it, the first emergency that happens, there goes that investment. I mean, I had somebody that invested money into Bitcoin when it was $100 a share, and then they decided to take it out when it was up to like 150. Yeah, they could have been well off by now. But it's the same mindset when it comes to the taxes. I don't want to deal with the IRS any way, shape, or form. I have clients that won't open IRS letters until I meet them the next year.
Right.
Because they're that scared of the IRS. So it's not always just about the refund. I think it's about having to deal with that agency altogether. When it comes to the refund portion of it, I think I agree, close to zero as possible. When you're in business, if you're not making estimated payments, then you know you're not gonna get a refund unless you have some ridiculous tax credits for new hires, for the incentive credits, for COVID and whatnot. There's a lot of credits going on right now, guys. A ton of business credits, but you have to have a business in order to get those credits. So understand, going back to the whole business concept and having a strategy, you can pay a lot less in taxes effective tax rates, as opposed to somebody who works for somebody 9 to 5.
So I don't want you guys to take it easy on me just because I invited you on the show. I want you guys to tell my audience if I've been telling them the wrong thing for the last year, because Pete just said something that I've been telling my audience for the last year. I wrote an ebook even, and it was one of my five major money moves was to start a business. I told people the United States tax code treats things that they prefer to have happen favorably by offering you incentives, and they treat things that they do not like by taxing them heinously. Most people know my background. I spent a large amount of time as a professional card player, and the United States frowns on gambling. And as such, I had a huge audit, $500,000 tax bill that I had to have dealt with because of one simple difference between and I was one of those gamblers that actually reported their income, whereas most people don't because it's cash and they think they can get away with it. I was trying to do it correctly, but didn't realize the way the IRS frowns on card playing. Without going too deep into the story and taking up better time, I was saying, hey, if I made $1 million playing cards, I was putting that down as my income and netting it against the losses. So if I made $1 million and lost 800,000, I was writing that I made $200,000 playing cards. That made sense to me. The government says that's not how you do it, Tank. You put the whole $1 million on your first page. And then you can itemize the 800,000 on the second page. Now, as a non-tax professional, it seemed like the exact same thing. But what I realized later on was all of the deductions that I was taking that were a percentage of adjusted gross income, I was now disallowed those deductions because it's harder to get 10% of $1 million than it is 10% of 200,000. So I tell that story to say the opposite is true. They want to reward home ownership, real estate investment, business ownership, marriage. There are certain things in this country that get rewarded, and you see it in the tax code. So I've told my audience, open up a business. You have to be profitable 3 of the first 5 years, or 3 in a 5-year rolling period. You guys can correct my numbers, so that you don't get your business deemed a hobby. And you should do that because that will allow you to then have deductions for things that you otherwise don't get to deduct. But in doing that, get the help of a tax professional. Like, don't just sit here and say, oh, I'm going to open a business. I have no idea about commingling funds. I'm going to get my corporate veil pierced day one because I write all my checks for my kids' daycare out of my LLC. You know, these are the things that I love having you guys on for, because if people don't hear that there are ways to pay less in taxes, you know, one of the biggest businesses that I champion, I don't do it myself, but is being a wholesaler. It's a low capital way to be in business. You can be riding your bus to your job, see a property, write it down, and tell someone, hey, here's a deal for you. And you're wholesaling now. So with that being said, just a general thought. I know I threw a lot at you guys. Could you guys touch on the importance of what Pete said, having a business so you can get deductions that you otherwise wouldn't, whether it's a business credit or things of that nature?
Yeah, so I'll jump in first. Definitely having a business allows you to definitely strategize a lot more. It gives you more opportunities to be able to deduct some things that you may not necessarily be able to do as just a sole individual as it relates to taxes. As it relates to somebody getting into business, you definitely should be working with a professional so that you can learn what is ordinary and necessary to your business. Again, I'm in accounting and tax, and that's the type of business I'm in. So I'm not in the swimming pool business. So, you know, if I go get a swimming pool at my office and say, yeah, this is for my business, or not at my business, but at my home or whatnot, and try to tie it to the business, you know, that's not ordinary, that's not necessary, and I won't be allowed that deduction. But there are some situations, I know there are several cases that have went to court, and those people have won because certain things were ordinary and necessary as it applied to their business, a yacht or something like that. You know, that will apply to somebody's business. But if you're a dog groomer, you can't go get a yacht and try to write it off unless you do grooming, yacht grooming in the seas or something like that.
Like the E-Trade commercial where the dogs are all living better than us.
You know that. That's what it is.
Right. But you definitely want to connect with a professional so you can have that in place. I always tell clients that you need to know what applies to your line of business, and you need to be confident in that. And you don't let the IRS tell you what it is, but you need to have that structured and in place from the beginning. So that's something that I would suggest any new business owner or somebody looking to establish a business to have that from the jump street. So you'll know what you need to be tracking. And it's not like, oh, I don't know what I need to be. Can you tell me? No, you should have known before you went and got that set up. So definitely that, and also entity structure as well, because a lot of people always say, oh, get an LLC. That's just the common thing. And while that's good, but something else may work better for you in your situation. So you need to know what entity structure is best for you from the jump, and just not pick something because that's popular.
It's funny you say that, Alexis. So I had a client come to me, and every year, her and her sister, who was her partner, they would owe the IRS $15,000 each because of the wrong business structure. We fixed the structure, and it went down like $3,500 each. That business structure, you're right. The buzzword is LLC, and Tank knows. We talked to somebody the other day. I was like, well, why did you choose that structure? LegalZoom said it was I was like, oh. Yeah, no, they're just going to give you the platform. You have to understand what the pros and the cons for each structure means. Is it a pass through? Is your effective tax rate higher than the corporate tax rate? So if your personal tax rate is higher than the corporate tax rate, why don't you leave the taxes on the corporate side and let them pay their own taxes? So it's really a professionals like us need to be able to have that talk before you go and jump in the pool. Let's talk about it. Make sure that the pool is clean before you even jump in, so we can help you out. But that structure is huge. That's a very big point. There's a lot of different structures. If you're a doctor and you're board certified, you have to have a certain structure. You just can't be whatever you want to be. So there's a lot that goes on to that. But the first thing is first, if you can run a business and have the ability to have the deductions that businesses get, take full advantage of that. But do it the right way. Don't hustle side money and cut corners. Do it right.
So, Kamari, I want you to wrap that question up, and then I want to answer this question about 9-to-5 employees, because we have talked a lot about business owners. So we want to be able to give something to the people who aren't business owners. But Kamari, jump on that last topic for me, please.
All right, I just wanted to say, Tank, that professional gambling can be a business. I don't know what happened. I've worked with a few professional gamblers in the past. I don't know what happened, why they disallowed it. It sounds like you did it as a personal write-off and not as a business one. But it might be too late to reopen those books. But just want to throw that out there. But again, LLCs, everybody doesn't need an LLC. I laugh at that. I'll say this: if you're in California, Massachusetts, New York, Maryland, a lot of times if you form an LLC, you have to file what's called an annual report. Matter of fact, Florida. Tank, somebody we know today has a problem with Florida because of their LLC. But we'll talk about that later. You won't, if you don't make a dime in those states, you still have to pay. In California, I think it's $800. I want to say it's either $500 or $800 in Massachusetts and New York.
Don't forget Jersey.
Right. What's Jersey? Is it 100?
561 minimum.
I forgot that one. I know in Maryland it's $300, right? So sometimes it makes sense just to use your social security number and start off as a sole proprietor if you're grinding from the bottom, if you don't have anything. Now, if you starting with some means and maybe it's your second business and you're doing something else, then you can look at some other structures, but don't get caught up in the entity at first a lot of times when you don't have any money. Now, if you got money, it's a different scenario. But if you're just starting out, you're getting it from the mud, you can just be a sole proprietor. And a lot of times that's going to be the best thing for you.
Appreciate that. So let's close out with, we had a couple of questions that we're not going to get to now, but maybe we can answer them. I'm having a 15 minutes of finance. You guys are more than welcome to check in tomorrow, but I'm going to answer questions that didn't get answered today in the wrap up tomorrow at 12:30 Eastern on 15 minutes of finance. But I wanted to ask a question, answer Tashawana's questions about regular folks, 9-to-5 folks. I know Pete touched on earlier contributing to the IRA between now and April 15th and getting a deduction. Is there anything else that people should be looking at? Maybe any COVID deductions or anything that people can be looking at as they're starting to prepare their taxes, looking at 2021 and saying, hey, let me add this before I file? See, the crickets there let me know that we may not have nothing outstanding to do.
So I'll say this, right? I mean, there's not a whole lot. People's right. You can do your IRA. But I would also look at, if you have children, not necessarily about what to do or what to get a further deduction, but making sure your return goes through smooth, right? Last year, we got a whole lot of stimulus, advanced child care tax credits. The IRS is going to be sending out letters later on this month, allegedly. Make sure you have those letters. Make sure you get those letters to your tax preparer, your tax professional. I want to say, I always get the letters mixed up. I want to say it's 66419, which will list out all the advanced child care tax credit that you received. That's going to be very important, because if you don't file it right, it's going to jack up your return when it goes to the IRS. It's going to create issues. I saw a lot of tax payers last year misreport their earned income, well, not earned income, their economic impact payment, or their STEMI payment, as a lot of people call it. And it held up their tax returns. Also remember that the IRS is still suffering a backlog. They're still processing taxes from 2019. I did get somebody's taxes done in a month. It got processed. Well, I didn't get it done. The IRS got it done in a month, and I was shocked. But that's not the case for everybody. So I would say make sure you get all your documentation, right? Get it in order. Make sure you get it to your tax pro. If you're doing it on your DIY system, make sure you have everything in order so you can do that. Lastly, I would say you might have missed everything for this tax season, but some of the things you can start thinking about for next tax season, because again, to me, the tax code is the wealth code. Start contributing to your 401k, especially if you get a match. You're missing out on free money, and it's one of the best tax write-offs you can get because they take the money away pre-tax. So look at that. Also look at HSAs. If you have an HSA at your 9 to 5, look at contributing to that as well. Also, I know there's a lot of people out here still telling y'all to play the exemption game and play with your W-4s. I don't recommend you do that because people change them really high rates so they can get a real high paycheck, and then they forget about it at the end of the year, and then they wind up owing money. So again, figure out what you need to do for your particular situation. Again, personal finance is personal. So make sure you can do all those things. And you can do those things now, right? I always tell people that if you're looking to get tax deductions during tax season, you've already waited too late. All right, you don't want a tax plan during tax season.
I want you guys, as we go around, to make sure you put in the chat your particular contact information, what your social media is, and things of that nature, so people can follow you guys. Pete, what would you suggest for people who are 9 to 5 employees? They're doing their taxes now. What do they want to make sure they dot the I and cross the T on?
Not forgetting stuff. I think what happens a lot of times is people don't bring everything to the table. Things get forgotten. We send a checklist to our clients so they can go A, B, C, D, because nothing worse than getting a letter 6 months later saying, oh, you forgot to have this, and then your new number you owe is this. The biggest thing, if you sell stock, right? If you sell any stock, if you're in any kind of mutual fund, make sure they're normally late when they're giving you that 1099-B. They're late as hell with that normally. Wait for that. Don't be in such a rush to get your taxes done that you don't send that, because they're not going to give you any cost basis. They're just going to give you purely what you sold, which is going to make your numbers look inflated. So just make sure that you have all your documentation. Again, we're past the end of the year, so a lot of the deductions you could have taken advantage of are pretty much gone. But I will talk about what Kamara said. Expect delays this year. Anytime the IRS has advanced anything, they're getting this whole stimulus thing wrong. People who didn't file the tax in 2 years, they're telling them they got the stimulus already, and so you can't take the credit. It's going to be a lot of mess. This is the longest it's ever taken electronic processing. Please note that you're going to have another slow year. The IRS is understaffed and still working on old taxes. So please be patient. It's not your tax preparer. He filed the taxes, I promise.
Alexis?
Right. I echo what everyone has said. One thing I did want to touch on that Kamari mentioned is don't play the exempt game, but you definitely may want to look into just making sure that you do have the right withholdings on your paycheck so that you are not in a bad situation. So I'm not saying exempt and not have any taxes taken out, but just make sure that what you do have, that it works best for you so you're in the best position throughout the year. And then also, again, just one thing that I notice, I work with a lot of clients and they do a lot of charitable contributions. So if you are in a position where you've done some gifting or anything like that, just make sure that you have that proper documentation. And then as far as charitable contributions, if it makes a difference for you, just depending on your status and where you are as it relates to the itemized deductions or whatnot that they provide according to your filing status, just make sure that you have supporting documents for that stuff. You have the check books or the checks that you've written, or you have the proof that you can tie it back to make sure that you can support that you took that deduction. Definitely make sure it is a 501c3 organization. I've had some audits come up and realize that large organizations that you would think like they had a 501c3 status because they're well known did not. So those clients weren't able to take those deductions. So just make sure that you have that stuff in place. And that's what I can think of when I think of an individual without a business.
I appreciate that. Hey, we had it rocking and rolling tonight with Alexis Sydney, enrolled agent out of Georgia, Kamari Ellis, enrolled agent out of Philly, my main man, Pete Baycoat of Centaurus Tax out of New Jersey. I want to thank each and every one of you for being here. Please follow these guys on their social medias. They will put it in the text, in the chat. And we're going to keep this going. Tomorrow's episode at 12:30 will be me answering the questions that didn't get asked to answer today about the home office business deductions from Rebel Hill and the commingling question from Brew. So with that being said, we've hit our hour. I appreciate you guys so much for being guests tonight. Wealth Our Way is made better by having contributors like yourself join us. I, of course, thank each and every one of you who have joined us. And for those people who watch us pre-recorded later on, I thank you for being here. And I want you to remember our motto is wealth is not only for the wealthy. I will see you guys on the other side. Take care.
Thanks for having me.